FAANG stocks are the cheapest they've been in 7 years. Which ones are in a buying zone and which one did my son buy this week? Nvidia earnings are next Wednesday. We'll talk about that. A lot of news for a company that tends to have a quiet period heading into earnings, including a massive announcement from Oracle. We also have Apple falling on its sword. Are the best days at Apple over? Will it be able to rebound from the tariff threats from the Trump administration and also its once chief designer now going over to OpenAI in a splashy deal? We'll discuss that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. I know you're doing well because it's not only Friday, but it's one of those special Fridays where you're moving into a 3-day weekend, at least here in the United States. Hopefully you have Monday off. If not, kick back and relax because a lot of people have the day off. And you should too. Let's kick things off like we always do. Meta platform. Start of the week at about 634. Like a lot of these stocks didn't do a whole lot this week. Heading into the 3-day weekend, Meta finishing down 1%. Finished the week at 627. Now, like I said, the Magnificent Seven, or we're old school here. We still call them this FAANG. They're the cheapest they've been in 7 years as it relates to the S&P 500 valuation. Obviously, a collection of things driving the valuation of these stocks down, particularly tariffs when you look at Apple, when you look at Amazon. Then you had kind of the limbo of those chip export ban that put Nvidia's valuation, at least more recently, in the tank as well. You have Microsoft, Google, and others having their own issues. But if they can navigate through this and obviously continue to raise earnings and profits, well, that valuation tends to rise. Now, a German rights group, a rare failure in terms of privacy law over in the EU, Facebook and Instagram allowed to train their AI models with the posts that you make. Equity Empire is off to a hot start. This is as of yesterday. These numbers are probably slightly lower based on slightly lower price action on some of these stocks this week. But these are all the recommendations that I have made since launching the service. And if you have more money than you do time, then Equity Empire is for you. If you have a lot of time, like I did 15, 20 years ago, I was broke. I couldn't afford paying for a service. I could afford to sit down and listen to the conference call, figure out what stocks to invest. I would never pay for something like this. But a lot of you guys are professionals. You have lives. You like to be active in the stock market, but you can't do that extra research. That's what we do for you. And I tee these things up for you. And as you can see, the success rate is relatively high. Moving on to Apple, start of the week at 205. Whoa, Apple down 5%, finished the week at 195. Gotta look at this one technically as well. Our 52-week low on this one is 169. We'll see if we retest that. Now, a judge is telling Apple, get your act together and sort things out with Fortnite, otherwise known as a video game made by Epic Games. And this looks like to me that Apple has lost here. Now, I'm not a lawyer, but it looks like to me they've lost this case. The judge telling them to work it out by May 27th or appear in court. I think Apple's lawyers are like, I don't think you want to go back to court, particularly this judge. This judge does not seem friendly to you anymore. We've already gotten this kicked up to the upper court, kicked back to the lower court. This looks like a losing battle. And the reason why you know that is Fortnite is back on the App Store after nearly 5 years. So it looks like Apple said, yeah, we're probably not going to win this one. So this is going to create a lot of challenges. And this is why you're seeing the multiple and certainly the stock price of Apple start to go in reverse, because Apple pays, or Apple gets $20 to $24 billion a year just for the default search engine from Google. That's a separate case. Apple collects a 30% app tax inside of the Apple ecosystem from video game makers like Fortnite. That's what this legal settlement stemmed back to. And now Epic Games, among others, have a separate payment gateway taking you outside of Apple, where they're only going to pay maybe a 2 or 3 or 5% merchant fee. So Apple is going to have to come back to the table with its app developers and probably cut the 30% down to a lower level. That is going to cut revenue and profits for the company. That is being priced in the stock at the current time. Now, you also have a chief executive over at Apple that is not managing his relationship with the president very well. Now, we'll get into this because President Trump allegedly met with Tim Cook earlier this week. On Tuesday, Tim Cook was seen going into the White House. It clearly didn't go well because just a couple of days later, President Trump said iPhones not made in the United States will be subject to a 25% tariff. President Trump saying on his Truth Social platform that he expects iPhones that will be sold in the United States to be manufactured and built in the United States, not in India or anywhere else. And the tariff must be at least 25% paid by Apple to the United States. Now, obviously, everybody watching this knows that Apple can't build the next generation of iPhone here in the United States. There's not the infrastructure to do it from a labor perspective or certainly a robotic or a machine level. Now, they probably can't even get it done for the next generation of iPhone. I don't know what number iPhone we're on, but the one that comes out this year, no mas. The one that comes out in 2026, you're probably not making that here in the United States either. In fact, it's probably not until President Trump's final term in office in his fourth year, in his second term, that maybe you could get a sprinkling of iPhones made here in the United States. What President Trump is asking Apple to do is completely unreasonable in the shorter term, 1, 2, 3, maybe even upwards of 5 years. But this is Tim Cook's job. Tim Cook makes $50, $60 million a year in salary and executive bonuses. He is like a star quarterback on an NFL team, or he's like Michael Jordan or a star basketball player on a star basketball team. When those players have shots to make in the game and they miss them, we criticize them. When your favorite quarterback throws the interception to lose the game, he is going to get criticized. Right now, Tim Cook is throwing interceptions. I understand that President Trump is asking something completely unreasonable in the shorter term for Apple to do. But again, just like a quarterback has to navigate defenses, navigate the weather, it's their job to throw touchdowns. It's Tim Cook's job to manage a relationship with the president. And we'll see when we get to other executives, including Jensen Huang, who has figured out the art of kissing Trump's ass to an absolute perfect degree. This is what you pay your executives to do. And Tim Cook needs to figure this out, or Apple needs to find somebody in the building that can go to Washington and kiss Donald Trump's ass, or they need to fire Tim Cook. This is what you do for your football team. This is what you do in small business. And this is what needs to happen at $3 trillion companies. They need to figure this out because Apple and Samsung tariffs are coming by the end of June. If Tim Cook could actually manage a relationship with Donald Trump, he would get him to slap Samsung tariffs on. Samsung is never going to make iPhones here in the United States, or their version of the iPhone here in the United States. Have them slap a 25% tariff on the Samsung phones, and Apple gets a reprieve because they have a 3-year plan to start building those things here in America. No, instead, the president appears ready to slap a 25% tariff on both of these devices. Well, it'll certainly not only just impact Apple, but also the carriers, the AT&Ts, the T-Mobiles. These are the lead incentives to get you to sign up. In fact, they absorb a large amount of the cost there. And so this will be a very interesting story. I just want to make it clear what President Trump is asking both of these companies to do, particularly Apple, is completely unreasonable. But it's up to the chief executive's job to work something out. Even when the president says that you can build iPhones in the United States, it's computerized. In some ways, he is right. There is evidence that cell phone manufacturers in China have spent just a couple of $100 million to Apple. That is like nothing to set up factories there that build phones without any human interaction. If Apple wanted to, they have the money, they have the resources, and they would be able to hire the talent or acqui-hire, go buy a robotics company, go buy the technology. Apple can make phones here in the United States. I've been listening to liberal financial analysts on Bloomberg and CNBC. These people don't like Trump. In fact, part of their employment at those networks means that they are liberal and they have that viewpoint. They get on and they laugh at the president. They laugh at the idea that Apple could build these phones. They can build them here in the United States. I heard the same thing from conservative Republicans during the Biden administration when they said there's no way you're going to build semiconductors here for the next 10 years here in the United States. Currently, we are building semiconductors in volume production here in the United States. And in just another year, all of the advanced semiconductors that the United States consumes will be made in Arizona. And that just took a couple of years. If Apple wants to spend the next 2 or 3 years figuring out how to make iPhones with primarily robots and a little bit of human interaction here in the United States, I guarantee you they could do it. They could get tax incentives. They could get different states, maybe not here in California, but plenty of other states to give them the land, to give them tax incentives to do it. Tim Cook's job is to do it. And the fact that he is failing is really, really bad. And maybe one of his other biggest failures this week is he let the chief designer, first of all, this was years ago, he let Johnny Ive not only walk out the building, but he took many of the lead designers with Apple with him. And now Johnny Ive sold a company that basically just started up called I.O. that has apparently a device that might be ready by as soon as next year. He just sold that to OpenAI for $6.5 billion. Again, $6.5 billion to you and me, and even OpenAI is a lot of money. $6.5 billion to Apple is absolutely nothing. It is a rounding error on their cash balance sheet. It's a rounding error on their revenue for a full year. The fact that this company has let the most iconic designer that they've ever had walk out the building and now partner with another company. On top of this, Apple is failing with AI. They could go out and buy one of these AI companies. They could have bought Anthropic before Amazon and Google kind of got entrenched there. They could have bought any number of companies to improve Siri over the years, and they're not doing it. At some point, the target has to be placed on the head of Tim Cook, and somebody might have to pull the trigger. One good news for Apple this week is that AI glasses could launch by 2026 with a price range of $300 to $400. This would be a product that would sell. I believe that would sell in volume at that price range. I think you're probably looking at Apple Watch type of volume if they are able to come out with these. Meta obviously has their version, and we'll talk about Google as well, partnering with the company soon to releasing their own. Amazon also, when I was at CES, has a very functional pair as well. They're actually pretty cool, particularly the speakers. You don't see the speakers and you can't hear when you're like next to somebody, but the speakers on these smart glasses like go like directionally right into your ear, like the sound goes right into your ears. It's actually the coolest part of the whole thing. You don't need the little earbuds or whatever these things are called. Now, these things are a great device, and whenever I lose them, I have to go, spend another $150 or whatever they cost over at Apple. So these are fantastic. I don't think we'll ever replace these, but someone like me that wears glasses all the time, I will get a pair eventually with some speakers on the side, and that is actually, I think, a very reasonable use case. Now, companies also struggling in China as they have domestic providers, including Huawei and others, producing very high quality phones there. Apple offering discounts of up to $68, which from a percentage of the phone base is probably not a whole lot, but obviously fierce competition there. Moving on to Amazon. Start of the week at 203. Amazon drifting lower by about 1.2% to finish the week. We'll call it at 201. Zook which is their autonomous vehicle fleet. These are kind of bus-like things without a steering wheel or not a traditional looking type of car. More of a not a mass transit, but they're meant to potentially carry maybe 2 or 3 people, maybe 4 or 5 people at a time. Now, they're testing their autonomous vehicle fleet in Atlanta, which obviously has a little bit more tricky weather than other areas where they're currently testing them, including San Francisco, Las Vegas, and Miami, among other places. Now, Nike is planning to sell on Amazon again for the first time since 2019. Now, you can go to Amazon and find some Nike, material, some Nike items, but those are going to be from third-party sellers that have been approved to sell the brand. It appears that Amazon's going to pull any non-Nike direct items off of the website, and Nike is able to bring their items back. It'd be interesting to know if Nike got maybe a reduced commission rate or those types of things, or if Amazon is fulfilling these types of things, but Nike looking to expand its reach. Now, speaking of Nike, Bill Ackman's got a big stake in that, but he's also pumping up a new stake in Amazon as the famed hedge fund manager discloses a new stake in Amazon. Moving on to Netflix. Start of the week at $11.84. And after my son bought shares, both of my sons actually buying shares of Netflix, shares of the streaming giant roughly flat this week, or up about 0.5%. Holding this 52-week high is a feat in itself. Netflix has obviously been on fire. They've got a new home for Sesame Street. It's over at Netflix. My son's never really got into Sesame Street. Moving on to Nvidia. Start of the week at 134. We're just days away. Next Wednesday, you'll hear from Nvidia, a big important event next week. Huge earnings announcements. I also plan to go live on the Equity Empire channel, likely later that night after the conference call. Just discuss what happened. We'll see if there's any massive reaction, but just kind of a fun event to do. That'll be next Wednesday. Shares of Nvidia heading into earnings down about 2%. They unveiled some next generation tech. This is going to go in their 300. This is GB 300 systems. This is the successor to the Blackwell, which is not even shipping in mass. Company says that those will launch in Q3. My guess is you'll get the announcement in Q3, but those won't actually be shipping at any kind of reasonable volume until you get into 2026. My guess is even probably in the spring or summertime, you won't even see these GB300 systems. This will be an incremental improvement over the Grace Blackwell systems, which are a leaps and bound over the Hopper. As we've noted here on the channel a few times, the Hopper systems basically being put on hold by most companies. They really want these Blackwell systems, and that's what Nvidia will be focusing on in their earnings call. Now, Qualcomm is going to make some custom CPUs, which is a data center chip that is dominated by both Intel and AMD. Qualcomm entering the data center CPU market. We'll see if they can find some footholding there. Now, the CEO of Nvidia, he knows Donald Trump. He knows how to play him. I don't know if Jensen Huang voted for him, or if he's the kind of guy that he would vote for, or if he even agrees with Donald Trump on a lot of issues outside of potentially the semiconductor business. But Jensen Huang knows he's in charge of a $3.2 trillion business. He's the quarterback of the company, and he's got to play the game as presented to him. I understand a lot of you don't like President Trump, but you're not the CEO of a $3.2 trillion company. I promise you, if I was the CEO of a $3.2 trillion company and I was making $40-50 million like these CEOs do, I don't care who was in the White House. I could disagree with them on 100% of the issues. I would go to the White House and kiss their butt, because that would be my job. And that is what Nvidia's Jensen Huang is doing. And out of all of these CEOs who I hold in high regard, I would say right now, Jensen Huang absolutely doing the best. I think they're all doing a relatively good job. Tim Cook doing an absolute terrible job as it relates to managing the president. But just based on that, Jensen Huang earning every penny of his compensation package. Oracle planning to spend $40 billion just on Nvidia chips to power the OpenAI's data center. This is a $500 billion center that's planned, or at least, segments of it planned, is just already under construction in Texas. The new data center is expected to start operations by the middle of 2026. This is in partnership with SoftBank, but also more importantly, OpenAI. Oracle reports earnings in, I believe, a couple of weeks, and it'll be interesting to see how investors digest the fact that the company probably has almost an unlimited amount of demand, but they also have a lot of capex that they're going to spend, including over at Nvidia. Moving on to Google. Start of the week at 165, and shares rose 1.84%. When I asked my sons this week, they got some money kind of dumped into their account, about $200, and I asked them. Now, I used to not ask them in the past. I would just buy different stocks for them and oftentimes just kind of put it into one of the Schwab kind of broad ETFs. But now I'm into asking them, hey, what company you want to buy? Last week, they wanted to buy Netflix, so I bought that for them. And then this week, I was like, hey, what companies that you want to buy? One of my sons said Costco, so he got shares of Costco. The other one said Google, and he says it's a great company. He thinks it's actually the best company. And I was like, all right, Google. So my son is betting on Google solving AI search mode. And that was the big topic this week, is the company had kind of a, presentation, AI or IO or whatever Google calls it. But they are bringing AI mode to search, where you're going to have, I think, an individual. So when you do a search on Google, probably even on like a phone or whatever, there's different tabs. Sometimes you go to images or news, or you go to, there's other things out there, or shopping. And now they're going to have a tab for AI mode, where you're going to be able to have a conversation. I I think this is the right step for Google. This will be very interesting to see how this rolls out. Also, they're already testing ads inside of AI search responses. They've noted that internally that they've noticed that the ad rates or the clickability of the ads, if you will, still remains high within testing. Now, I have some performance max campaigns. So this is really getting in the weeds of Google, but if you run ads, there's different versions of the ads that you can run. There's something called a performance max campaign where you upload images, and it's a little bit different than the traditional kind of cost per click model that they have. So I have some of these campaigns and I jacked it up. I wanted to see if I could start showing up in this AI. I haven't seen any difference. And in fact, what I've noticed is my budget. I set my budget, like I'm trying to spend like $1,000 a day on ads. Sometimes it's weird with Google. Sometimes I'm able to spend, $200, $300, which is about where it maxes out in terms of a day on ads. And then sometimes it's weird. Like some days and some weeks, I can only spend like $20 or $30 per day. And it's not like I have a ton of competitors or anything. It's weird with Google. I don't know. Maybe they'll get it cleaned up. In the past, I used to be able to spend $300, $400, $500 a day. Sometimes I'd have to cap it. More recently, it's been kind of up and down. And so we'll see if the AI, smooths that out. From an advertiser perspective, I hope they work it out because I'm trying to spend more with Google. And if they're able to serve my ads to more people, I'd be happy to bring that traffic on. Now, they continue to have antitrust challenges amid the AI deal. I actually think the deal with Google's in court that might not allow them to spend $20 or $40 billion to be the default search engine of Safari, of Apple, and other devices out there. I actually think that's more detrimental to them, to Google, than to Google, because I think most of us my age, and certainly maybe a little younger, but certainly older, we're used to Google at this point. And if we got fed Yahoo search results and Bing, some of us might not change, but many of us will go through the process to be like, no, and I don't want the default to be Yahoo. I don't want the default to be Bing. I want to keep using Google. And so I think what we'll find is Google does have a little bit of moat around their business. It's not just the fact that it's a default. I think that contributes a lot to it. But again, we'll see how this works out in court. Now, the company is committing $150 million, which to Google is like basically nothing, to develop some AI glasses. And that is with Warby Parker, which is like an eyeglass, or actually it's a public company. Looks like they've rallied the stock up to about $20. I remember when it was a lot less. And obviously AI glasses in robotics, that's going to be a big story in late 2025, but certainly as you get into 2026. Other big story is obviously these robo-taxi services, and you have Waymo cleared to expand its robo-taxi service in the Bay Area. There's two types of people in the finance world. Some just listen to Elon Musk and they're like, robo-taxis are like years. I literally get comments every week on my YouTube channel, people being like, what are you talking about robo-taxis? Those are 4 or 5 years away. Hello, get on an airplane, fly to San Francisco. You only need to spend an afternoon in San Francisco. I'm talking about San Francisco proper, the actual city. There's outskirts, San Jose, Palo Alto, those areas. No, go to the San Francisco city, go find a coffee spot or a restaurant and sit out, and Waymo will come by every 20, 30 seconds. I mean, these things are everywhere. They're a little bit in Los Angeles. They're expanding there. Give it another year or two, and you are going to have these all over the place in major metros, not in little Hobunk towns and little flyover states. That's not going to be the case. But out here in California, these are going to be everywhere. And part of that is the fact the only thing holding this back is government. The only thing holding this back is both federal but state governments as well. Now the South Bay, which is nearly all of San Jose, and particularly the airport in San Francisco, getting these. Once this is available throughout California, you are going to be able to only have one car at the most. There'll be no reason to have more than one car as a family. You are going to be able to have one car that is in your driveway most of the day out of convenience, and then you're going to be able to take these robo-taxis very soon statewide, and that will be a big, big, big deal. Moving on to Microsoft. Start of the week at 455. Almost got to 460. Posted a video a couple of weeks ago after earnings, said, hey, we're going to go to 460 very soon. About half the comments said I was an idiot. About half the comments, as usual, are wrong. We got to nearly 460 on Microsoft. clear area of resistance. I mean, if you just clean off your glasses and look at a stock chart every once in a while, these things actually aren't that hard. I'll show you Microsoft, how it got rejected at 460 and how that's not surprising at all. OpenAI, obviously partnering with the great Johnny Ive on a $6.5 billion deal. They're going to bring a device which is being described, at least at the current time, as like the original iPod Shuffle, which was a small device very much like this. You might wear this around your neck, apparently, but it would have a camera and a microphone, and you'd be able to interact with, in a way where you're using your voice. I could see this translating to a pair of glasses as well. This is not going to replace a phone, just like phones didn't replace laptops or even desktop computers. The phone is going to supplement devices like this. We will maybe not spend as much time and screen time, and that is what is coming down the road, particularly as it relates to AI. Apparently, Johnny Ive and Sam Altman, who have struck up an incredible friendship, it looks like, they talked up the new AI device with the staff, and that's where a lot of the leaks and stuff that I've seen over the past couple of days, and I'm sure over the next year you're going to get a ton of leaks out of that. Moving on to Tesla, start of the week at 336. Nobody is buying any of their cars, but the shares continue to move up by about 1% to finish the week at $340 per share. BYD is selling more EVs than Tesla in Europe for the very first time. What's up, bud? And the Chinese are great at scaling something up and then squeezing all of the margin out of it. So we'll see if this is a long-term thing and if they can maintain that. It's difficult for Chinese companies because that is kind of the culture there. The culture is to copy and mimic what is done and then squeeze all the margin. From a long-term business perspective, it doesn't always work out in the shorter term. And we've seen it with like coffee brands there. We've seen it with other things inside of China where a brand scales up and everybody's like, oh my God, this is the next big thing. And then it shrinks and then it consolidates. There tends to be maybe about one or two companies. We'll see on the EV space how that works, but certainly globally, Tesla's got a lot of competition there. Now, they are confident, though, Elon Musk is, that you will have self-driving Teslas in the millions by the end of 2026. Not necessarily a stretch, considering they know how to make cars, particularly in volume over at Tesla. It will all be regulatory. You could have these Teslas on the road self-driving people right now in any jurisdiction. Now, will weather and will other things get in the way? Will there be accidents? Will there be probably potentially tragic accidents? Absolutely. These things will never be perfect. Will they be better than humans? I think absolutely. And it'll just be up to regulators to decide when they make that jump. And it appears Elon Musk will be at the helm of Tesla for at least the next 5 years. And despite a lot of the things that has happened with him politically over the past year or so, I don't think that's the worst thing for Tesla. And I think if he can dial things back maybe a little bit, they can rebuild their brand. I've seen many of brands over the years get rebuilt, and I think Tesla can easily do that as well. Now, moving over to the technical segment of the show, we're still locked in this uptrend that we've been in really since 2022. We touched the bottom. In fact, we pierced through it during those tariff scares, but nothing to be overly concerned about. We bounced immediately back up to the middle of the channel, and here we are. We're setting up here on a 3-day weekend. And you're looking to maybe make a new higher high back up here at 6,200. What that would take, I don't know. Probably some blowout earnings or blowout guidance really from Nvidia certainly could do that. We'll see what happens. But if you do come back down here and retest areas back into the 53, 5,400 on the S&P 500, absolutely should be bought. Moving on to Meta. This one also looking very similar. Been locked in an uptrend. You had an opportunity to buy this one back down in the $500 range. We've snapped all the way back to $630. The all-time highs would be back up here close to $750, $800. You don't got earnings for a long time on these stocks, so you're like 2 months away from earnings. So that is not going to happen anytime soon. So we'll see what happens if news flow affects. But obviously tariffs and exports and all that stuff impact Meta to a lesser degree. Moving on to Apple, we have been locked in a long uptrend here. This has been dating back for about 5 years. Occasionally we break out the bottom, but we almost immediately make a V-shaped recovery back to the top of the channel. We've done that a number of different times over the past 5 years. I always say this, when you're at the bottom of the channels, it is the hardest time to buy these stocks. The news flow is never good when you're at the bottom of the channels. Something is going on from a macro perspective, from a micro perspective as it relates to the company, as it relates to Apple, the tariffs, Tim Cook, Johnny Ive, all this stuff is terrible. And so it should come as no surprise to anybody that shares are at the bottom of the channel. And look, I've got paid subscribers that, I'm spoon feeding them picks, and it is my pleasure to do that. So I'm not going to tell you whether to buy or sell Apple, but here you are at the bottom of the channel, a 5-year channel. And every time over the past 5 years, you've touched the bottom of the channel, you've had a V-shaped recovery to the upside. Moving on to Amazon. Clear area of support for Amazon between 150 and 190. We are slightly above that, back to the 189 level. Could be a buying opportunity for that. My son has bought shares of Netflix. They're very excited about Netflix. And you're here at the top of the channel. We're expecting pullbacks in Netflix back to 1,112 and all the way back to about 1,000 should be bought probably aggressively. Nvidia is moving into earnings just 5 days from now on Wednesday. All-time highs up here at 150. Wouldn't surprise me if you could maybe potentially walk up into that range heading into earnings. I don't know what they're going to say on the conference call. The current quarter is going to be okay. I think it's going to be in line. The next quarter might be in line with expectations, but how well does Jensen Huang sell up the Blackwell, which by all accounts is going to be one of the biggest products of all time from a sales perspective, and how he talks that up, because those sales aren't going to come in large quantities until later this year. Will Wall Street look past this quarter and potentially next quarter? It's hard to say. Wall Street is very short-term looking. A lot of people say Wall Street's forward looking. They're only as far looking as they can see, which is like a quarter or two. We know this, okay? Particularly around larger companies like this. If Jensen Huang can convince them to the back half of the year, which should be absolutely fantastic, well, shares could break to new highs. Google looking pretty good. Still very much in a nice trend here with Google. There's really nothing to be overly concerned about here. You've confirmed a new higher high recently. We've come down here, retested some lows, bounced back. We're at the middle of the channel or just south of a middle channel with Google. If you like Google like my son did, buying shares here, not necessarily the worst decision. I've got to reset my price scale here because that looks absolutely terrible. Microsoft, after earnings, gapped up. When it was in the 420s, I was like, hey guys, we're going to 460 soon. And we pretty much did that. Why did I say we were going to 460? Because once you gap and then move the top of the price range, there's going to be a lack of sellers here. There's going to be more buyers. Again, retail investors and retail tends to buy at the top. So that is why you get upward pressure. Retail doesn't buy at the bottom. They don't buy at the bottom of the channel. That's why if you need help and you need instruction on how to buy at the bottom, believe me, that's all I do. It's all I've been doing for my whole career is I love stocks when everybody else hates them. And when Microsoft was down here in the 350s, I literally was personally buying these shares myself. Now we're up here at the 460s. Wouldn't be a buyer. You break above this level. It doesn't mean shares are going to go down. In fact, sometimes just the opposite. You could get a breakout here. It could go really high, 550, 560, 600. I don't know. You tend to have a back test. That back test should absolutely be bought. Now, the other likely scenario here, the more likely scenario is you get rejected here. Rejections back south of 400 on Microsoft should be bought. And then finally, Tesla is making a beautiful, absolutely beautiful technical pattern. We have been going sideways for a while, but this one is now starting to look very, 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 very tasty. You had a low back here in 2023, higher set of lows in 2024. We just confirmed another higher set of highs here in 2025, or higher set of lows, excuse me. You would like for Tesla to push back into the 550s. Now, I understand there's some of you that put your fundamental hat on and you're like, at 550, Tesla would be worth more than every car company that's ever existed in the world. Yeah, but if you want to zoom out on Tesla, do this to like a 1 month chart. Let me show you how long Tesla has been valued more than every car company in the world. It's when they went public back in 2010. It has always been the case. Now, that's not to say that it won't always be the case, but here we are. We've got a longer term trend on this one intact. You would like for Tesla, if you want it to go up, You want this one to retest areas here at 534. I would take profits, at least on portions of positions up at that level, because Tesla, as you know, swings wildly, and you probably swing all the way back down here to $300. You get another opportunity down there. Folks, that was FAANG Stock Recap Show for Friday, May 23rd. Hopefully you guys have a safe and fun weekend. It is a 3-day weekend, but I'll be posting some content over on the Equity Empire Premium section. Also, make sure you join us next week when Nvidia reports earnings. For some of you, if you're on the East Coast or you're like on later time, it probably won't be like 9 p.m., 9:30 p.m. Eastern time. So it might be too late for some of you, but out here on the West Coast, it'll be 6:30 is probably when I'll go live. We'll recap some of the stuff that goes on with Nvidia on the conference call. And, I'll answer some questions. If you got some questions, you can fire those off in the chat. There'll be a mechanism in order to do that. This will be free. It'll be live. It'll be over on YouTube, over on the Equity Empire channel. Make sure you're subscribed to that, and make sure if you want premium research that delivers results, links are always down in the description for that as well. Folks, hopefully you guys have a safe and fun weekend. Get that barbecue cleaned up and fired up, and I'll see you again soon. Good luck with your investments.